Hello friends. In this video, we are diving deep into the Economic Survey 2025-26 to understand exactly where the Indian economy stands right now. If you've been following the headlines, you've probably heard the phrase oasis of stability. And that is exactly how the Chief Economic Advisor has described India in this year's survey. In a global environment defined by what the government calls managed disorder, India has managed to keep its head above water. Let's break down the numbers, the risks, and the new warnings issued by the government. First, the headline numbers. The first advance estimates place India's real GDP growth for the current financial year, FY26, at a robust 7.4%. This isn't just a short-term spike. The survey argues that India's medium-term growth potential has structurally shifted upwards to 7%. Looking ahead to the next financial year, FY27, the survey projects growth in the range of 6.8 to 7.2%. This is significant because it is well above the 6.4 to 6.6% estimates projected by various global agencies. So what is driving this growth? It is primarily domestic demand. Private consumption and investment are doing the heavy lifting. On the supply side, the services sector remains the powerhouse, estimated to grow by 9.1% this year. In fact, services now contribute more than 56% of the country's gross value added, acting as a critical stabilizer against global volatility. Manufacturing is also showing strength, growing at 8.4% in the first half of the year, driven by the Production-Linked Incentive or PLI schemes, particularly in electronics and mobile manufacturing. However, the survey is very clear that this growth is happening against a backdrop of a fragile and diverging global economy. The survey outlines three potential scenarios for the world in 2026. The most likely scenario, with a 40 to 45% probability, is a continuation of managed disorder, where trust erodes and trade frictions recur. A key risk flagged here is the AI bubble. The survey warns that if the current AI boom fails to deliver the promised productivity gains, we could see a correction in asset valuations that might trigger financial contagion globally. Speaking of AI, the survey takes a very interesting and somewhat cautionary stance on technology this year. It explicitly warns about digital addiction and the mental health toll of excessive screen time on India's youth. It suggests that the rising use of social media and scrolling is linked to anxiety and depression and actually recommends that we might need policy interventions like age-based access limits or regulating autoplay features to tackle this. Another massive concern raised in this year's survey is regarding resources. As the world pushes for AI data centers and renewable energy, we are facing a physical shortage of critical minerals. The survey points out that the world will soon run short of copper because of the exponential power demand from AI and data centers. This makes critical minerals the new strategic choke points of the global economy. Domestically, while the center is sticking to fiscal consolidation, the survey has raised a red flag regarding state finances. It has come out strongly against unconditional cash transfers by state governments. While acknowledging that these transfers provide immediate relief, the survey warns that they are eating into fiscal space that should be used for development and infrastructure, potentially harming medium-term growth. On the inflation front, things look relatively benign. Headline inflation has moderated to 1.7% in the first half of the year, driven largely by a drop in food prices. However, the survey warns that we shouldn't get too comfortable. Risks remain from global uncertainties and rising prices of precious metals like gold and silver, which have surged as safe haven assets. Interestingly, the survey also discusses a shift in India's strategic approach. It talks about moving from Swadeshi to strategic indispensability. The idea is not just to be self-reliant, but to become so critical to global supply chains that other countries cannot easily substitute India. This includes diversifying our export markets. For instance, despite the US imposing high tariffs, Indian exporters have successfully pivoted to markets in the EU, West Asia, and Southeast Asia to keep export numbers up. Finally, for the common man and the markets, there are some specific takeaways. The survey suggests rationalizing the tax treatment of debt instruments to bring them on par with equity, which could be a game changer for long-term savings. It also notes a massive shift in household savings, with Indians moving away from traditional deposits and heavily into the stock market. To wrap up, the Economic Survey 2025-26 presents India as a country that is growing confidently at 7%, driven by domestic strength. But it is not blind to the dangers. From the fiscal risks of state-level freebies to the mental health crisis of digital addiction and the looming global resource crunch, the road ahead requires caution. As the chief economic advisor put it, the outlook is one of steady growth, but it calls for caution, not pessimism. Thank you for watching. If you found this breakdown helpful, don't forget to like and subscribe for more updates on the Indian economy.